Welcome to Momentum Monday. Howard, are you back in San Diego?
I'm back. I'm in my little cage. Got my Lulu top on. The air conditioning's blazing. It's I don't have a window outside. Is it nice out, Ivan, today?
It's getting nicer. It was kind of cold earlier.
And did you have fun at Stocktoberfest?
I did. I saw some old friends. I met some new people. It was fun. Yeah.
Quite a group.
Yeah.
For everybody, it's last Momentum Monday of October, and it's going to be a wild end of the year. I mean, seasonally, I think we're going to, the checkbox should be strong, but I am, there's so much, I wrote about it yesterday, there's so much anger that I can't tell what's fear, what's anger. I can't tell. I have no feel for this tape because the anger is so high around the world, and there's so much political disruption that I don't know what is actual fear. I mean, the statistics we'll get to show some pretty good fear. There's also so much anger, and then you have the elections, and you have overvalued companies, and you have rising interest rates. So we'll get all that, and that's kind of showing itself in the small caps, Ivan, or the S&P. Where do you want to start?
We can start with the S&P or with the QC. It doesn't matter. I mean, they look similar, but you're right. For the market to turn around, we need a catalyst, and since we're in earnings seasons, earnings reports could be catalysts. But what we're currently seeing is that the market is in a pretty sour mood. I mean, companies that report decent earnings are getting slammed.
Yeah, if we look at Google, Netflix, Amazon, doesn't matter what they reported, the market was in the mood to sell off. Wow, Amazon's down to 1568. Woo. So it's down another 75 today. Hang on.
Yeah.
Okay, so we've got some decoupling, right? The FANG stocks are a mess.
Most stocks are a mess. As you can see, that was a huge earnings surprise, 83% above what analysts expected. But they gave us soft guidance for their sales for the end of the year. And I mean, this market, the slightest negative news can lead to a sell-off, and this is exactly what we are seeing. In a more bullish tape, Amazon would be trading at all-time highs. So this is why
it's up 50% on the year. I'm just trying to think where we are on the year. No, it's not up 50% anymore on the year.
So let's see. January right here, it was 1,200.
So it's up, 30%.
Yeah.
Yeah, I think this is a stock to watch right now. I mean, this is the stock. It's through its 200-day, Ivan. It's overvalued. I don't know by any metric other than people believe Amazon will be higher, which is great in a bull market, but like in a bear market, that makes no sense, right? The market will do what it wants to do. Technicals go out the window, and valuation. People trying to understand what a company's worth matters more in a bear market. So massive volume, market's in a bad mood. Stocks below its 200-day moving average. I think this is the poster child for risk, and we're in a risk-off phase. In China, it's Alibaba and Tencent, right? If we look at those, there's no bottom.
Yeah, the Chinese stocks cannot get a relief rally at all. I mean, they continue to just make new lows.
I don't think Americans would be used to that, right? And Amazon could just sell off, be down on the year, and still be hard to value company. It wouldn't mean if Amazon went to 1,000, it would still be in an uptrend on many levels. Yeah, China's a mess. So let's go back to Amazon. If it fell to 1,000, if we go back to a monthly, I mean, this stock could fall to 1,000 and still be in an uptrend. So it's just in no man's land. It's, 1,200 maybe. I would get reinterested. I'm glad I sold some on the way up. I don't know what to tell people, but it's not. I'm not a good enough trader to decide in a market like this if 1,500 is the right price or 1,400. But I need some big moves to get me off the sidelines here, or I need the market to firm up and take some time and then start catching a bit. Okay, what else are you seeing here?
I'm seeing that stocks that are typically defensive, like some of the oil change, tire services company, educational stocks, stocks that typically outperform in recessions are outperforming. So, I mean, which to me, that means that the market is trying to discount a potential recession 6 to 12 months ahead. We don't know if it will actually happen, but this is what the market is currently doing, trying to do.
Mm-hmm. Yeah, I just think for me as a trend investor, it's just pretty much everything I wanted is gone. I don't want to be in auto wholesalers, and although that looks interesting. I mean, I don't want. I think there's going to be some new leaders come out of this whenever we finally turn, because the market was getting pretty stale in terms of who we were relying on. I think the FANG stocks, combined with the private companies that aren't public, like Uber and Airbnb, have, I mean, Facebook's taken out its lows, is it not?
It's trying to hold, but they have earnings tomorrow, so that will be interesting.
It's not going to be earnings. It's going to be, they're going to put as positive a spin on this. The market's in a sour mood. I mean, it's yearly lows, is it not? It's taken out.
About Facebook is that market expectations are already pretty low because of the sell-off in the past 3-4 months. So if they come up with good numbers, we might see something.
Yeah, but technically, I just, I don't see it. I think social's just heavy. Twitter had a good number. I got that wrong. I thought there would be a shit show. It's just back. It didn't collapse. The earnings were actually interesting. No real growth in the platform, but they're monetizing it pretty well, as they should. I mean, I think news is hard to monetize, but I mean that's back on my on my watch list, and I did buy a little bit at 32 last week just to participate in case I was wrong and the stock just starts going up again. But I don't have much conviction there. There's so much overhead resistance. There's so many unhappy employees that I talk to with the way they've been run, that the brain drain continues there as well. So it's really in the middle of nowhere. Anything in the growth area? Here's Apple. I mean, their earnings are Friday. This could be 180 or all-time highs. I don't know. I mean, it doesn't mean anything about the company. I'm bullish on Apple. I always am. But technically, I have no idea what to expect here.
Definitely, it's looking vulnerable to a pullback.
Seller, I talked about it last week. I sold some more shares. Of my long-term shares about 220. I'd be happy buyer at 180, 190. But okay. And so here's something that's working, Ivan. Cadence.
I'm just taking a look at some of the stocks that had a initial positive market reaction to their earnings, and as you can see, they're not really consolidating through time or trying to follow through, which is another sign of a weak market.
But if we scroll out there, if the market starts firm, these are the ones you want to have on your list because they will
be among the leaders. So after a big market correction, like there are two types of stocks that outperform. The best outperformers are usually the ones that were hit the worst, and then the second best are the ones that held the best.
Yeah, I'm more focused on 8 to 80. Yeah, I own them, but I'd be focused on stuff like this. So audio codes. Okay, voice over IP. Let's go back to that and Cadence. Okay, so this is a stock that small cap, but big growth, great earnings. I mean, pretty cheap. And then the voice is, okay, so that's interesting. Small company. Go back a weekly, a monthly, Ivan. Yeah, I mean, if the market firms up, this could be a new leader. I mean, it is a new leader. It just depends on if it can continue in a bad tape. And then Cadence, Yeah, I mean, you're basically back to 2000, and you're basically at all-time highs, right? It came public, it's back above its IPO price. And then we have Cadence, which, doing great. Okay, so this is a great company that's performed well and really not giving back much. And so it's software related to electronic circuit design. Okay, so generally a cyclical business, but huge growth. All right, so if it takes out all-time highs here in a stronger market, this could easily go and could be a new leader. All of a sudden, the market loves Walmart. Everybody's swapping out of Amazon, I think, the institutions into the more stable Walmart. So that's holding up the market bigly, as we would say. Trading at 20 times earnings, not really growing, but their digital appetite has been massive. And it's not for me, but you can see that money is flowing around still, not completely out of the market. Okay, so Walmart.
Starbucks is holding well.
Starbucks is holding well. You got an addicted base. I hate everything about the company and the product. As a coffee drinker, I use the Nespresso machine at home, so I don't go to Starbucks anymore. But that's just me. They're a mobile payment company, and much like Domino's, they could be one to watch coming out of this correction.
I think people love the Starbucks mobile app, just the ability to order on their phone. And
convenience matters, just like Domino's. Sometimes the product doesn't matter, and so Starbucks you have to take seriously again. But I own McDonald's. I love what McDonald's is doing. I'm at McDonald's once a week, whether it's for coffee or whether it's just they're updating all their stores. I mean, this is one of my favorite large cap companies because it covers coffee. It's the food's better than Starbucks at every level. They're getting the stench out of the old stores, the smell of oil. I'm just super bullish. I'm just super bullish on how they're reinventing themselves in a different food environment. I mean, they've been very helped by Uber Eats. Chipotle's fine, but it's just look at McDonald's. Let's go back to McDonald's because I'm long, and this is in my 8 to 80 list. This is what I replaced Starbucks with, a few months ago. and I think, they've really ridden Uber's back here, the Big Mac. I watch my son using Uber Eats, and McDonald's really ridden Uber Eats' back. We'll see what happens if Uber kicks them out at some point. But McDonald's is poised to be a new leader, and it's more of a technology company than it ever was. They've replaced, although I find them confusing, they've got the robots in the store and the computers in the store to take orders. But I really like the redesigns. Obviously, their locations.
I think the most interesting part about McDonald's is that their sales have been going down. Look at that. Like compared to last year, they went from 5.7 billion to 5.36, 37 billion. But their earnings continue to grow despite of that, like from 147 to 210.
Despite closing stores, I don't know the details. Remember, if they're reducing bad sales, like stores like Starbucks type sales, where it's stores within a store and blah blah blah, then it doesn't matter, right? Margins are what matter, and earnings growth. Now, I don't know if it's all. This is not a growth stock to me. This is just a great company in my 8 to 80 list that I feel that is viable on big dips, and it's diversified in a way, technology and food wise, that I like, and I think they're benefiting from some technology like Uber Eats. Okay, next.
Let's take a look at the S&P 50.
Yeah. So Cadence is there, Xilinx, Walmart, some of the stuff we talked about, CME Group, PayPal. So if we pull up PayPal, it's probably my favorite new idea. A lot of my smart tech friends are calling me on it. They had a good earnings. Obviously, it's in no man's land here for the last 6, 7 months, 8 months. But I think if the market catches a bid based on their last earnings and the fact that Venmo is now increasing what they're charging people, this is back at the top of my watch list as a stock that could be a true growth stock. I love Venmo. I use it once a week.
I didn't know that Venmo charges anything. I think
They just added last week, if you look it up, and that was going to be the death of Venmo and nothing, they were going to charge 1% on balances or something. I didn't read the nitty gritty detail. I was just watching the price action. But, I think above that post earnings high in the high 80s in the stronger market, this stock could be a new leader again.
Yep.
Because if Venmo can start making money and not piss off their user base, then God bless them. I love the app. Their competitor Square also struggling, but had a great year. I don't love this company as much, but or nearly as much. But you can see that, like PayPal, it's just kind of back in its base of the last year. Where's Visa and MasterCard?
They're holding relatively better than the rest. I mean, as you can see, they're still above their 200-day moving average.
I'm thinking I'm going to replace. They're both in my 8 to 80, and I'm going to replace one with PayPal or Square at some point here. It's probably going to replace one of these with PayPal, in my opinion, but I'm just going to give it more time because I don't need to own both, and I want to diversify my 8 to 80 list in fintech. But we're starting to get to this new era in fintech where there's just so many great new companies coming, right? I see some people on Stock just talking about the fang of fintech, right? There's going to be some great companies that come out of this bear market in the fintech space, and it could be crypto, it could be a new broker dealer like Robinhood or Coinbase, it could be one of these payments companies, or it could be Goldman. If we look at Goldman quietly, even though I hate them, and they're not getting credit for it right now, is they're investing for just about any big fintech company they got a piece of right now. So maybe that backfires short term in terms of the market, and because if they're investing in overpriced startups, that's not going to help them short term as they get valued more like the NASDAQ. But I think at some point in a bull market, Goldman will start being valued more as a tech holding company. So again, short term, it's just I don't see anything to do there. Long term, that could be a play, but we're going to need to see some market strength. And you can see there's just no rush to do anything. This is a great time to do, to protect your capital. Would you say the same?
Yeah, definitely.
Even Silicon Valley Bank. Remember I said that was going to get hit? I don't have the nerve to short stocks, but I think it's SB. I mean, look what happened in the last 2 weeks. It was right around 300, and I was a couple of weeks ago on the show. I was like, why is that could drop to 200, and boom. So, here we are. That was like one of the strongest bank stocks. But if we scroll out here on a weekly, if this stock's in the 160s, 180s, this may also go to my 8 to 80 list as I swap out of Visa or MasterCard. So PayPal, SVB, Goldman, these companies, who financially someone's going to come out of this bear market, which may just be starting, I don't know, but someone's going to come out of this bear market, a new leader in fintech. But we can see the rates just crushing things either now. If we look at that, then that doesn't really paint the picture of like how rates are just skyrocketing short term.
Yeah, they definitely spiked, but they're still not that high historically. But the speediness of the rise definitely was substantial and scared a lot of people out.
Yeah. Okay. If there's nothing else, Ivan, let's call it a day.
Okay, let's wrap it up and see you next Monday.
Can we pull up Netflix one last? I mean, this is good. Okay, that's a reach. They're finally bouncing the banks, but if we look at Netflix, it's really it's very heavy. So a lot of the subscription, it's one to keep an eye on in terms of like skepticism. The market really is skeptical right now, right? No matter what a company says, a company better report really good numbers, or you're not going to get the benefit of the doubt. So another note to be careful. Okay, Ivan, have a great week.
All right, Howard. See you
Thanks,
next.
Market Smith.
Yeah.